Today we have with us Scott McMunn, the CEO of the LMA. Thanks for joining us today. Appreciate it. I know you're super busy. Before we get into it, for people who don't know, can you tell us a little bit more about what the LMA is?
The LMA is the Loan Market Association, and it's a trade association that represents the interests of the European, Middle East and Africa loan markets. Sounds pretty convoluted, and it is, to be quite frank, but it's a very powerful organization. The voice is really, really strong. We have nearly 900 members, ranging from large investment banks, small regional banks, significant multi-strategy credit funds, real money, through to small single strategy funds, technology and service providers, law firms, rating agencies, other parts of the loan ecosystem. And together, it's a really powerful and strong voice. So, great organization. I've been there just over a year. Prior to that, and again, in the interest of honesty, I never thought 18 months ago I'd be sitting running a trade association. I'd been in investment banking. I'd run trading desks, businesses at a couple of the large international investment banks. Left those to try and do a startup private equity firm and then a startup mortgage company. Both were less than successful, unfortunately, but the learning experiences are very, very strong.
Failure can be a very strong learning experience.
I think we'll cover some of the things, I'm sure, but when you are involved in a startup, the best things are to pivot quickly or fail quickly or move quickly. I think procrastination, slow decision making is really, really bad, and I think you've got to take risk and move at pace. And make sure that the risks aren't fatal. You're going to make mistakes, and certainly in 12 months at the LMA, I'm sure we haven't done everything quite how I would want to have delivered and achieved, but ultimately there's been more right than wrong, and the rights are pretty significant. I think we've had a huge amount of successes. So 12 months ago, I was looking at what does Scott want to do. I had the opportunity to lead the LMA. And when and I've got a great board, by the way. The board who sit on and oversee what we do is really powerful, really strong, and incredibly senior people who are committed to the industry. I met a number of them, and I said, if you want me to run it, this is what I want to do. I want to almost rip up the past. I think if I look at the LMA, I would like to re-energize it. What do we do? How do we look at things? How should we think about doing things? I'd like to get recommitment from our members, have our members involved at the right level with the right people and deliver the right things. And probably even more, ambitiously, to be bold and repoint what we actually do to reflect the loan markets of 2024 and beyond, rather than 2024 and before. And that means covering more markets, more products, more innovation, using social media, using propaganda or PR in the right way, but ultimately listening to different channels, different voices, different tones, and making sure that output is impactful. So here we are 12 months on, and it is great to share some of that 12-month journey with you and hopefully your audience, and with that we can get even more involvement with the things that we're doing and the outputs that we're trying to create for the industry.
Yep. So what have been the biggest wins for you in the last 12 months, as well as the biggest challenges, of course?
The biggest wins are kind of easy. I may move away from the so what and do stuff and actually do things that make a difference, things that you can actually measure, things that you can actually put KPIs and metrics around, and actually create facts that you can see change the needle, change the dial. So if I cover a few of the things, and some of them I'm very passionate about. Firstly, the LMA has always been really successful and really powerful at delivering events. I think 2024, we've actually introduced a bit of a sea change to some of the events, the quality of the speakers, the content that we've covered, some of it even being provocative.
Yes, I was at your conference in Paris, and some of it was provocative. It was a very good conference, by the way.
And I don't mind that, because not everybody has the same voice and not everybody has the same opinion. I'll talk about young talent, and you've been very supportive and helpful in some of the work we've done there. But there is a history in our industry of lack of diversity, and I don't mean gender diversity. I mean diversity of thought. You know, the recruitment side of the industry has always been mathematicians or engineers or science who are coming into trading positions, and you create almost the, you know, a simple walk following the same path without a different perspective or a different challenge point. So I think the events, we've seen that provocation. We've seen actually a sidebar to have more senior people targeted to attend and actually restrict the invites to almost like a priority access special invite list, and make sure that those bums on seats are there for the duration, which I think is great, because the content is something that, you know, like, wow, I didn't know that, or that's informative, or how can I take that back into my business? The networking remains the same. We still have great networking, but we've supplemented that with great content. So I think that's a big win. If I look, I think, more powerfully at the engagement, and I'm sure we're going to talk about this, one of the reflections of the loan market is it's the amount of financing that comes from institutional investors now rather than banks. And I think to be successful, you need to represent the NBFIs and the buy side of the banking community in private as well as public markets, and then consider even the asset allocators underneath the loan funds themselves. And I think success has been the connectivity with many of those members, not just joining the LMA, but actually participating in our outputs, our commitments, and the work that we're doing. So I'm seeing that, which is great. Members have gone up, which is always nice. But I think those softer things are really, really important. A final softer thing, which I think has been really great this year, has been the introduction of Future Lend, which is a program we've set up for bankers, lenders of tomorrow, to reflect how do we support that community. It's the loan market, as you know, Corey, has got a bit of a history and a perception of, is it fax driven? Is it email driven? Is it an Excel spreadsheet? Although someone said that's the cutting edge of technology in the loan market. But how do we make people feel that they want to be in this industry? It's dynamic, it's forward thinking. And I'm really proud of the work the LMA has done to support that next generation, that future talent. Numbers wise, I early on I looked at the challenges in operational efficiency in the loan market, and we made some commitments to reduce secondary settlement times. We committed resource to it. We've set up a committee, and we've got really engaged senior people from the community to be involved. And we've started that journey. We've been successful in 2024. We have a lot to do. And we move from the low-hanging fruit into permanent change in the use and adaptation of technology. We move through that to behavioral change from the key participants. And we do that through fact-based information that allows decisions and has accountability. So there's a lot of successes, I think. Now, the challenges, probably like a balance sheet, there's an equal number of challenges.
It'd be boring if you didn't have challenges.
It is, you know, I don't like it being too easy. And I think the challenges, maybe some of it stems from me. You've known me for a year or just over. I am very ambitious, and sometimes, to use an army analogy, you kind of move beyond your supply chain. Sometimes, you know, you move and you penetrate and you go into areas, but unless you are supported with, you know, people, resources, capacity, and supplies behind that, you can run out of oxygen and things pause. And I think I've maybe committed certain things, and as it's got to it, because of the pressures of compromise or the pressures of a large workload, we haven't been able to execute on everything. I think, you know, certainly I would have liked to have done more. I do have a great team, but
you do have a great team.
I do. It comes back to diversity, the, you know, bias, diversity, thought. I think.
Well, you brought operations people in, which was great, and Paul's got a ton of experience.
I think gender lens is great, but and we will jump around a little bit. I hope you got great editing skills.
Yes.
But even having the diversity of different people on my board,
Yeah.
you can't have everybody from head of syndicated loans. You got to maybe even cover real assets or sustainability or what's happening in Benelux or the Nordics or Southern Europe or Middle East or Africa, rather than just have it the London Market Association or the Law Market Association.
Mm-hmm.
It's the loan market, and it needs to cover more than that. But I think maybe one of the final challenges, which again you make assumptions, I was probably a little bit over optimistic around the foundational build of the LMA. And it's great when we speak to people like you who are doing a real startup. I felt the LMA when I came in 12 months ago was like a 20-year-old startup. There was perhaps things missing on the right building blocks of a sustainable, viable, risk-managed operational, structure. So a lot of my time is having to put those things behind the scenes that you don't see in place to make us even more powerful. It's not like it wasn't working, but it's got to work in the right risk-controlled, risk-adjusted, measured way, so you can make the right long-standing decisions, rather than coming back to what I said, just doing stuff. So I think a big challenge has been adapting to change. People don't like change. My members don't like change, and some of my members grumble that, why are you doing this, Scott? Or we always used to do this. But the broader membership base see the bigger advantage, they see the bigger picture. And some of the team, the comment now, and it's a great team, some of the comment says, wow, the outputs are fantastic, this is really, really good. And I'll give you a great example. Last week, we were really, really lucky. You'll have seen this year, we launched the sustainability magazine called Horizons. So it was a little bit different for the LMA. It was a brand, it was a promotion, it was a online publication, which was pretty glitzy, nice and glamour, and we got thought-provoking interviews from members and non-members. We kept it outside the firewall. We kept it available for everybody to promote the work the LMA is doing, which is the greater good. We have a great partner, Design House, who do our creative content with us. And last week, that company and Horizons was awarded a prize for 2024 up against some major financial institutions and technology firms. So actually creating a brand and creating an idea and Gemma part of the team. Yeah. There's some of the things that you look back and think, 12 months ago, that team would never have wanted to do anything like this.
Yeah.
Fast forward 12 months with a little bit of a shove, give them the spark, and they've delivered things which are award-winning, prize-winning, and make a difference to the loan market. That's pretty cool.
That is pretty cool. That's amazing. You guys are doing more in the sustainability sector as well, right?
Well, when I started 12 months ago, the LMA had 3 targeted focus points or 3 kind of pillars. It was efficiency, liquidity, and transparency of the loan markets. And I introduced, I can't remember if you recall, but I introduced a new word to the strategic objectives, which was sustainability. So sustainability is now just as important as efficiency, liquidity, and transparency. Sustainability is now a flagship event for us. We have a senior person leading the charge there, supported by another senior. We are recognized internationally for the work that we're doing on standards, guidance, metrics, performance. So again, I think we've done a really, really good job, not just in the docs and not just on the materials, but the promotion of the impact. This is important. We need to do it. Engagement with borrowers. And even more importantly, I would say the engagement with the regulatory bodies who are supportive of the work that we are doing. And finally, and I keep saying even more important, this is probably something also I'm really proud of, it's the ability to interact and connect and do it jointly with the likes of ICMA, Capital Markets Association, or the LSTA, the US Loan Market Association, or the APLMA, to show that we are joined up and global and connected. It's and important. We're doing the right thing.
Absolutely. So we talked a bit about 2024. What's on tap for 2025?
There's a little bit of a spoiler alert here. So, so your readers or listeners or know that we'll get the early heads up. We are formulating a 2025 vision and a 2025 strategy. And, it's interesting for me, 12 months ago, I thought this is a pretty good 3-year plan. Fast forward 12 months and I look at it and I was like, it's a little bit 10,000 feet, Scott. It's a little bit, you've came in and you probably don't know your members or the markets maybe as much as you think you do.
That's life, right?
And it's life.
That's how it goes.
It is life. You extend your supply chain as the analogy I used. You get over your skis. And, fortunately, 2024, we've had a lot of wins. And the drop sets or the drop points have not been catastrophic. And we've learned from them and progressed. So I'm looking at what do we do in 2025. And I think there's some really exciting things ahead. I think if I look at the first level, let's call it private markets. I've spoken about the buy side, but 2023, 2024, the newspaper and press attention on private credit has been through the roof.
Oh, it's the buzzword. Buzzword. In fact, one of our podcasts, we said that it was more Googled than Taylor Swift at one point, which is...
I think you probably copied that from me because I think I mentioned it at the private credit conference.
Someone said it to me and then I repeated it on a podcast, but I wonder if it's still true. Probably.
I did, so 1 month into the job last year, I think we did a private credit seminar and I Googled Scott McMunn, private credit, and Taylor Swift to see how many. You can guess who was third. But
Taylor?
But private credit had more than Taylor Swift. If I take that fast forward and go up a level, private credit is now really private markets, and the regulators, I think, were like, well, what's this thing called private credit? But now private markets is private equity and venture capital and infrastructure and ref, as well as private credit. And you've got GPs as well as LPs. And you've got the extension of that activity into fund finance and NAV lending and subscription lines. And you've got credit risk insurance and you've got significant risk transfer. So that phraseology, private markets, for me, is really front and center of the work in 2025. And particularly when you look at NBFIs and the constituents they represent of my member base, it's really, really important to me to deliver for them. Yep. So that the details to be delivered and worked out, and we've set up an institutional investor committee with some senior level representatives of the board to shape the work that we do. It will be outcome driven. It will be anchored on efficiency, liquidity, and transparency, and it will be impactful, and it will cover anything from regulation or docs or guidance or settlement efficiency, as we spoke about, all the way through to channels of distribution. So technology is really important. So when I talk about channels, I'm talking about potentially the use of Web3 and blockchain and tokenization. We're looking at UCITS and ETFs and the expansion of how you distribute asset classes for my members, ensuring that's within the right guardrails. So that's my criticality in private markets. Strategically, I think regulation is really, really important for us. I think the LMA needs to have a seat at the table. We represent such a large part of the industry, and we should be part of the discussions, particularly around, if you look at Draghi, how do you promote capital markets union and the growth of economies? And a lot of that is through the transmission of finance and the transmission of lending, which comes into how the LMA can help secure that in a safe, efficient, controlled manner, where there's no unintended consequences, there's no overreach, and we can keep the manner of capital flowing to borrowers. So those are two of the areas which I think will see a priority for me. I think we extend the work that we're doing in sustainable finance. We extend the work that we're doing on operational efficiency. And that technology landscape I mentioned, it moves not just into NBFIs and private markets, but it covers everything from AI, large learning models, data scraping, operational efficiency, other forms of tokenization, trade finance, export credit. All of those, I think, they're learnings and paths that I think we can develop and grow on. There's a few areas I think we should consider. I'm toying with the idea of establishing what the LMA should do on data centers. And the data centers is an emerging asset class.
Yeah, you had a panel on it in Paris.
Great panel.
I never knew so much about data centers before.
Yeah,
I didn't realize how much of a sector it was.
I think the scary thing, Corey, is get into pounds and pence or dollars and cents. The size of financing required, and we heard in Paris, a gigawatt data center costs like $1 billion.
Well, there's syndications on it just to support it. I had no idea. So
and if we're moving to where more and more power is needed and more capacity is needed, the gigawatt goes to 5 gigawatts. So you're going to see 10, 15, $20 billion financing.
Yeah.
So the size of that market could be critical and really, really large, which has implications on obviously the ESG sustainability element, but it also gives, I think, the LMA the opportunity to look at what are the right foundational building blocks of good, sustainable, critical lending. And I mean the taxonomy of language, standard definitions, transferability. As we were 25 years ago at the start of the LMA, what is the right documentation framework to allow consistent, transparent lending practices? So it's an option for me, and I think within my 2025 vision, I've got a little bit of optionality. And if I fast forward to the end of 2025, success would look like I've managed to reduce, with the help of the members and Paul doing a great job, we've reduced settlement times lower. We've moved it from being the low-hanging fruit into technology change and behavioral change. We're partnered with my colleague Sean at the LSTA, and we're doing it globally. So I think that would be a really successful 2025. We have buy-in from the institutional investor base, even more so, where we have more members, more of a voice. We extend that, the army analogy, we extend the perimeter into stronger connections in the Middle East with the LPs and the asset allocators, up into Scandics with the real money, the insurance companies and the pension funds who are allocating up there. So I think there's some clear successes we can do. And then ideally in funds finance, we're seen as a thought leader, and we're seen as the trade association that's supporting this $1 trillion market that many people have never even heard of. So I think I've got a clear set of measures.
Sounds
and
like
objectives.
You're going to be really busy in 2025.
There'll be some, fortunately, there'll be some new faces.
You never seem tired either. Every time I see you at a conference, doesn't matter what country, how long you've been traveling, you're always in a good mood. You're always smiling.
It's playing havoc with my my BMI and
story of my life, Scott.
Plain food, bad carbs, processed food. Lack of exercise. And,
I know. As someone who also lives on airplanes, it's a challenge.
And the occasional glass of wine to network at the end of the evening. But, again, fundamentally, the LMA is a member association. We rely on our members. The networking is incredibly important, if not essential, to us being successful. And we've got to make sure that, I've got to make sure, my team's got to make sure that we spend time with the members. We can't assume that what we want to do is what our members want us to do.
Yeah. Listening to your members is key.
And you got to have the challenge.
Yeah.